everyone. Welcome to Greater Bay Area Blockchain Week 2021. I'm Olga Yaroshevsky, head of content for NexChange Group, and your MC today. And I'm honored to host an amazing panel on smart regulation. We have the smartest minds joining the panel today, representing the key regions and unique experience. Let me introduce Albert Isola, Minister for Digital and Financial Services, Government of Gibraltar. Welcome, Albert.
Thank you, Olga. Nice to be with you.
Thank you. Syren Johnstone, Executive Director of the Compliance and Regulation Program, University of Hong Kong. Hi, Syren.
Hi, Olga. Thanks for the invitation.
Thank you. Last but not least, Henri Arslanian, FinTech and Crypto Leader for Asia PwC. Welcome, Henri.
Thanks for having me. Congratulations on this great event.
Thank you. It's always good to see you. Welcome, everyone, again. Thank you for joining us. So before we get to discussing regulatory challenges in different parts of the world, I'd like to quickly get your opinion on something that has been making headlines on literally every blockchain-related newsfeed. And I'm talking, of course, about the SEC versus Ripple case. And this case, which is the second loudest after the Telegram one, really showed everyone the need of actual regulatory clarity. And until it's reached cases of any range, smaller ones or bigger ones, like the one with Telegram or XRP here, can altogether be a true security case or a business battle case or a politically flavored case. What do you think of the Ripple case? Where does it put the SEC and where it can direct the blockchain community? Who would like to kick off here?
I will kick off. I think that it's a most unfortunate case, and it's hard to really get into the mindset of the SEC to bring the action. There's a lot of commentary floating around about that's positioning the case against the comments that William Hinman made back in 2018 about Ethereum being sufficiently decentralized that it's not of interest to the SEC. The SEC now seems to be saying that, oh, look, because there is a company, Ripple, that seems to make a difference. When, if you look at it from a functional point of view, the fact is that Ethereum, the developers of Ethereum at the Ethereum Foundation are effectively still evolving Ethereum in a similar way. My expectation is that this is simply creating uncertainty, that it is highlighting the failure of the SEC actually to do better in terms of clarity to an industry that is already huge and becoming larger. And my prediction on an outcome is that if we get enough exchanges between the lawyers, this will provide interesting insights, but that we won't get to a court judgment on it. I think we'll get to a point where there's a face-saving settlement from both sides, pretty much like Telegram, pretty much like EOS before it, and that's where we will be left, which unfortunately is kind of like 2 steps forward and 3 steps backwards.
Can I just butt in? For me, this event that you're hosting, Olga, this morning is about smart regulation, and the United States is teaching us exactly how not to do it. We still have a piece of legislation from 1946 which determines what a security is, and we're calling that interpretation and adapting it to a digital asset. You've got to be bonkers if you think that sort of framework is going to give any firm and any business any degree of certainty or security as to how they can manage their businesses. And therefore, that's where this event is focusing on smart regulation, because I believe that the US takes the view that when something is big enough, then it's going to move in and do things to it, which nobody knows where they're going to come from, why they're going to come for it. And the whole thinking behind the regulatory action, in my view, should be when you're breaching something. And I don't see that in the United States. And so I think the sooner that they get to grips with actually deciding who's going to regulate this space, how they're going to regulate this space, and why they're going to regulate this space, the whole blockchain space and the whole crypto area will dramatically grow as a result of that certainty, because that's what firms are crying out for. So when firms come to Gibraltar, they want to know that they're coming here for certainty. You've got a legal framework, you know what you have to do, you know which hoops you have to jump through, you know what you have to do to stay on the right side of the law. That is a framework that gives people the certainty to be able to confidently invest and grow their businesses. And so the Ripple case, the Telegram case, and unfortunately there'll probably be a few more firms very worried looking over their shoulders as to if they're going to get the call or not, for me stems from this lack of regulation. And that is what, I pull the little hair I got left at, worrying about why we are in this position and why the US doesn't do what it should do, which is lead.
Henri, you agree?
Maybe I'll just, I think there's a lot of interesting points that were raised. One thing I'll just mention, I think, of course, this case is quite particular, and we've seen the previous settlements from the Block 1 case, the Telegram case, and others. I think there's the way I look at this is actually in the US, so to be fair to the US crypto community, over the last 12 months, we've seen actually quite a lot of very interesting developments on a regulatory front. I know from the OCC allowing stable coins to come in to broader clarity in the space. That being said, I think some of these enforcement cases like this Ripple one that we just saw right now creates obviously some uncertainty, but also frankly also from a lot of the crypto exchanges in the US had to delist XRP immediately, which if you think about it, I mean, if from a purely due process perspective, every time there's an investigation and actually and the exchanges have to delist a token, it raises a lot of questions as well. And I think, again, brings up a lot of what we see in a global perspective, which is what for a lot of companies now, they're unfortunately staying out of the US for some of these reasons that Minister Isola mentioned as well. So, I mean, let's see how it goes, but I mean, it's a case that I'm following very closely. And Sora, by the way, I think a lot of people are trading the asset. I think there was this showed us that actually a lot of the strategies that are done in a traditional financial world, like event-driven strategy, where people look at a certain regulatory development and trade around that. That's something we're seeing with XRP, where the price almost dropped 65% after this announcement came up in the next couple of days. So definitely that area that I'm watching very, very closely, and whatever may come up with this case.
Right. Thank you. We'll see where it takes us. Albert, now to you. You mentioned companies coming to Gibraltar, and I know that since 2020, Gibraltar is one of the first jurisdictions to introduce a clear regulatory framework for cryptocurrencies and companies that use blockchain. And I read one of your recent interviews about this framework, and you mentioned that maintaining high entry barriers through regulation is essential as progress is made to attract companies of the highest quality to operate in the space of DLT. So, as far as I understand, blockchain companies and financial platforms based in Gibraltar meet quite strict standards. And what are those standards? And what kind of companies are welcomed and allowed to put their seeds in the Gibraltar soil?
Yeah, I think the philosophy is simple. We require all of our firms here to comply. And comply means comply with regulatory standards, international standards. And if you look at the history of what we've done 25 years ago, before internet really existed in a commercial sense, we allowed gaming companies, online gaming firms, to set up in Gibraltar, but they had to meet a very high standard. And what that meant was, even before the legislation was ready, we licensed them by contract. And that enabled these businesses to come in knowing they could do the business they wanted to do. And today, we are the premier online gaming jurisdiction. 15 of the largest companies in the world are based here. 3,500 people work here, 24/7 operations. 80% of the UK's online business is run from here. In the gaming space. And so when we looked at that, and then we looked at the blockchain space, we wanted to replicate the thinking and the philosophy. So they had to be regulated, they had to be in Gibraltar, and they had to have that mind and management here. And of course, ringed all of that was quality. So what we did was we implemented what we call the 9 core principles. We actually gave the regulator an element of discretion, which governments don't normally give their regulators discretion. We gave them discretion because the space was changing, fast moving, and it wasn't as fixed as, for example, Solvency II regulation is for insurance firms, where the capital ratios are very clearly delineated. So we needed to give the regulator area to maneuver within the ring fences that we wanted to create around the space. And so we developed these 9 core principles. You'll be familiar with them. Anybody that's in financial services will be. Sort of, your capital requirements, your business plan, the fitness of propriety, your AML, very important, the compliance mechanisms, security obviously is important. So we developed these 9 core principles, and now actually we're working on developing the 10th core principle, which is to do with market integrity, which is one of the things we're working on over the next few months with a specialized working group. But everything that we've done with a working group, with a private sector, with a regulator, and with the government sitting around a table, thinking through how we can have an efficient but effective system of regulation, which encourages innovation, but sets the bar fairly high. So the result of all of that is that we've now got, I think, 16, 17 licensed firms in Gibraltar, all of a good quality, all having gone through a licensing process with the regulator, which has taken between 8, 10, 12 months. We're very happy with the slow and sustainable development of the space, which is going well.
Interesting. By the way, so one of a GBA Blockchain Week speakers who actually is based in Europe made a good point recently when discussing efforts for countries to establish a digital asset-friendly space. He pointed out that, first of all, regulators don't often talk to business owners. And the second point was that banks don't enter the game, taking down all efforts to build an actually balanced ecosystem. So in big countries with huge machine-like regulatory bodies, it takes months for business owners to sit down with regulators. While in smaller ecosystems like, let's say, Malta or Gibraltar, it only takes one phone call and one day, and then a business owner sits down at a table with the regulator and then discuss important things. So how Gibraltar business owners cooperate with you? And for the digital asset situation, how do banks position themselves?
I think when we were offline, when we were saying hello to each other, Henri made some commentary on the size of Gibraltar and the fact that everyone knows each other. I mean, that's very true with 32,000 people. And that has its advantages. As a result, we're a very agile community. We passed this blockchain law, came into effect on our statute book on the 1st of January 2018. We'd worked for it for 3 years before with a working group. So our ability to move quickly is as a result of our size. And that same agility is what enables firms to engage with the regulator. Firms have access to the regulator. It's critical. When I first came into this job 7 years ago, my #1 mission was to stop the regulator being a school teacher, talking to its firms as pupils. This is a normal client relationship where the regulator has clients who are the firms that it licenses. And so I demanded that they reply to emails on the same day, return phone calls on the same day, and respond to correspondence. It's just education, I suppose, if you want to call it that way. It's being polite. And that's how professional firms should behave themselves. And so our regulator very much lives up to that ethos. So if you want to talk through anything with the regulator, you pick up the phone, you call them, you have a coffee with them, you have a meeting with them. Because at the end of the day, surely as regulators and as governments, if a firm has got a problem, the first person I want them to call is the regulator. Not to be scared and try and hide from the regulator. I want them to engage with the regulator as the first port of call. So you can discuss it, you can find ways around it, you can find ways to resolve the problems that you have, but do it together. And that produces a far better system of regulation where there is mutual respect, there's no fear, and you know that if you walk into the regulator with a problem, he's not going to hit you on the head as the first thing he does. He's going to talk to you and try and find workarounds. And so that relationship, I think, is absolutely critical to any financial services business, and particularly so in the blockchain, where some of the things that people are coming up with may sound a little bit crazy, but when you speak to somebody that understands what you're trying to do, that process is actually very much easier. With banks is a problem across the world in terms of working with this space. We have a number of banks in GIB that will open accounts for regulated firms. So for the bank to know that the firm that they're working with is regulated is a first step through the door. If they're not regulated, they won't look at the business, like most banks across the world. But of course, it's the correspondent banking where the difficulty arises, because all banks rely on correspondent banks to be able to move money around in fiat. And until we're in the space where we no longer require that fiat interchange, there's still going to be a large dependency on traditional banks. So we've managed to get a couple of banks in GIB to look at this space. We continue to work with them, to educate them, to help them understand our thinking as to why we believe it's safe for them to do so within the parameters that they set. Obviously, anti-money laundering is a key area, due diligence, source of funds. These are all normal areas in financial services business. And in this space, it's no different either. So they need to get comfortable, they need to understand. And I think that the more countries that have this area regulated, the more banks will see coming into the space and allowing the business to grow, which is, I think, what we clearly all want.
Okay, interesting. So gain trust and share trust is one of the advantages of the ecosystem that you've managed to build over the last years. And what would be the greatest challenge in terms of making the regulations smart?
One thing I've said publicly when I've spoken around the world in this area over the last years is that if somebody does something better than us and we're watching, we have no hesitation in saying we will mimic it and we'll copy it. At the end of the day, what we are seeking to build is the best regulatory platform for this space. And so that means that we are, for example, I mentioned earlier, market integrity. We believe the risk of market abuse requires to be tackled. So we're expanding the 9 core principles to 10, and we're doing something on market integrity. We've already passed laws in Gibraltar which will comply with the FATF and particularly the travel rule. We're watching how the FATF develops. We're looking at MiCA and what the European Union is doing. We're looking at the consultation that the UK has going on at the moment. So we're very alive to what other countries are doing. And what we would love to see is an international set of standards and regulations across a much wider area of the planet, which will enable this business to grow because more and more people will trust it. Institutions will not normally invest in areas which are not regulated for good reason. Ripple and their experience in the States is one example. So the more regulation there is, the better standards there are across the globe, the better it will be for the space. And we are very much alive to that and tracking and following what other jurisdictions are doing to see what lessons we can learn to enhance and improve our own platforms.
Great. This is the, the international synchronization process, I guess.
Yes.
Thank you, Albert. Henri, now to you and your top 10 predictions for 2021. You did publish them back in December 2020. I have everything on record. So you said that new regulations will drive traffic to DeFi. Let me quote, one area to watch will be the impact of new regulations from the FATF travel rule to the potential ban of crypto retail trading in certain markets, which we see in India, possibly, which may inadvertently drive traffic to such offerings. So I think it's fair to say that DeFi and regulatory efforts are so far from one another, and regulators care about DeFiers as much as DeFiers care about anything centralized or KYC'd out there. So anyway, where do you see this traffic is being driven now? And looking back at the first quarter of 2021, where's everyone's attention apart from Bitcoin price?
No, Olga, it's an interesting question on DeFi. I have to say, when it comes to decentralized finance, I have to say, I personally didn't expect the industry to move forward so quickly. I mean, just to put things in perspective, about 12 months ago, there was less than $1 billion in total value locked, which is how we measure kind of the activity on DeFi. Now there's over 40 billion, which was absolutely incredible. And I think we all see the kind of the activity and kind of the enthusiasm and the new projects are coming in. What I was mentioning in my predictions last year was really because I think there's a risk as we move and we try to put not smart regulations, as is the title of this panel, actually you kind of drive out traffic to the complete unregulated space. And I think what's been interesting there is actually 2-3 things that have been happening. One of them is obviously volumes in DeFi have been growing, but frankly, also it's been actually quite positive in many regards. I mean, I'm actually personally very excited about DeFi because for the first time in a very long time, it allowed us to have a first principles approach to financial services. Really now in the DeFi world, you're able to actually get borrowing, lending, trading, even insurance in a fully decentralized way, which I think is very, very exciting from that perspective. And in addition to the point of actually being a kind of open source, is the fact that it's actually the whole element of composability, that I can go today, take any DeFi application that I like, pretty much mix and mash them together and come up with a new offering that I believe would actually enhance financial services offering, at least in the DeFi world. And I think that's very, very interesting and really makes us reflect on what is the purpose of financial services. Now, I think the 2-3 things that I'm watching right now over the next couple of weeks and months, one of them is we mentioned before, Minister Isola on the FATF, for example. FATF just came up with some new guidance and where they try to actually kind of put on the AML side and on when it comes to DeFi as well. So I think that's going to be very interesting how that is possible to done, because as we know, it's actually very, very difficult for regulators, even if they wanted to go and regulate DeFi. And second thing that I'm really watching is really if it becomes a bit easier to use. DeFi, as much as actually volume are growing, it still remains on the fringes, even on the crypto space, because it's not, unless you have some good technical skills, it's not that easy to actually get involved in the DeFi space. And over the next couple of months, I expect to see numerous, let's say, front-end applications that will make it easier, where people will get involved in DeFi without even knowing they're involved in DeFi. And I think that could be a very big game changer on that perspective. And that's going to be very interesting to see how the regulatory framework that, frankly, we all want in the crypto industry, we need some smart and appropriate regulatory framework, is going to interact with this kind of DeFi application. And that's going to be definitely something to watch.
Well, that's an interesting point. Yeah. And speaking of the Bitcoin rally, I get it that there are several components for this. So our neighbors and relatives already asking about how to buy Bitcoin, or even altcoins in my case. Big institutional players coming in, and well, it's fair to say regulatory appreciation, right? We can't deny Bitcoin anymore, and retail is getting crazy about it, and there's an ETF fever. So how do you think regulators should appreciate cryptocurrencies?
Well, I think it's been the last couple of months has been absolutely incredible in the crypto space. Again, if you asked me only a couple of months ago that the price of Bitcoin or crypto markets would be where they are now, I would have never imagined that. I think there's a couple of things I think we need to keep in mind. One of them is obviously, in addition to the reasons you mentioned, regulatory clarity, entry of institutional players, and so on and so forth, there's also the macroeconomic environment. Let's not forget, with all the levels of quantitative easing going on, I think people are becoming more aware or sensitive of what is money, what is a store of value, what is inflation, what causes it, and so on and so forth, which inherently often drives traffic, at least to Bitcoin, from that perspective. When it comes to a regulatory perspective, for sure now, I would say globally, there is some good level of understanding from regulators, let's say, on crypto. And now I think where it becomes interesting is how regulators are going to act on it. For example, I'm seeing increased levels of fraud. I mean, personally, a number of my followers or people watch my content, reach out to me with platforms. They're asking them that they need to pay their taxes before they can get their money back. Some that are asking actually to get control of their device. There's a lot of fraud going on in the system, which is something we saw in 2017, which is what we saw in the previous rally before as well, which happens in a lot of these cases. That being said, I think it brings the point forward that also I think we need to be realistic. You know, I think unfortunately there's the image of cryptocurrencies are these money launderers, as criminal activity. And as we know today, only less than, according to the latest data, around less than 0.34% of crypto transactions come from illicit sources. So I think that's one thing to bear in mind from where it is going. Second thing I'm watching as well is how you're going to give access to retail people. You know, ETFs, I think it's going to be very interesting what happened in Canada. It'll be interesting to see what happens in other countries around the world right now from the retail perspective. And second is actually countries are looking potentially at banning it. I mean, good example is Hong Kong. We're coming out with new regulations on crypto that are de facto make it impossible for a retail individual to buy Bitcoin legally if these regulations go through, which I think is a problem, because at the end of the day, if you don't let somebody do what they want to do, they will go do it either illegally or in ways that are more dangerous by buying an OTC, by some guys they find on the internet or even on some other platforms. And I think when it comes to consumer protection and to a certain extent financial stability, this could be detrimental. So I think definitely an area to keep an eye on, especially following the recent rally that we saw the last couple of months.
I hope we don't get back to the darknet though. Okay, so before, while preparing for this panel, I've actually asked every panelist to think of a question to another panelist. And here's, Henri, here's what Albert came up with. And here's his question to you. Are the views of Asian regulators becoming more aligned with those of the entrepreneurs in the space? Coming back to your point.
Well, I think any regulator or policymaker was as acute of the industry as you, Minister Isola. But I think what I would mention is that thankfully, Asia is, I think Gibraltar is incomparable, you know, but I think there's been a lot of good efforts on regulators in Asia. To a certain extent. I think it depends how we look at it. For example, let's look at for example, central bank perspective. I would argue some of the most advanced projects right now on the wholesale central bank policy perspective are happening right now in Hong Kong and Thailand with Project Lion Rock Itanon. When it comes to retail central CBDC, what's happening right now in China is probably years ahead of everybody else in the world. However, I think you're right when it comes to regulatory clarity, the same day response, which is great customer support, customer service perspective, which is bringing this customer service element, is something that I think we're not seeing not only in Asia but anywhere else in the world. I think what I think this reinforces is actually the need of hubs. I mean, for example, as you know very well, in Gibraltar, a number of Asian companies or companies of operations in Asia also have a kind of a hub or kind of a pied-à-terre in Gibraltar as well, which I think it reinforces that jurisdictions that are able to have this kind of clarity, openness, and are able to solve some of the basic issues that we're having around the world, including bank accounts. We discussed bank accounts before, which is, by the way, unacceptable around the world. I'm still seeing banks are promoting Bitcoin and crypto. They're entering the space, and then shutting down accounts on the other side of crypto companies. By the way, not only crypto companies, but also the entrepreneurs behind them, which I think is very ethically and professionally questionable. I think this all brings up the issue. So I think there's been a good developments on Asia on certain regards, but I think there's some of the inherent limitations that a lot of these jurisdictions have, which obviously somewhere like Gibraltar, where you have the agility, the openness, and the kind of the size as well, are tough to replicate, as you mentioned, Minister, beforehand.
Albert, do you have any follow-up questions?
No, I think as usual, Henri's answered that fully. I mean, it's bizarre because the first MOU that we signed as a jurisdiction was actually with the Hong Kong regulators in terms of the space. And there was a real desire and a willingness to learn, but things have changed, obviously, as they do. But I think the interesting part is that the progress they're making on the wholesale side, which I think is really fascinating and will lead to more businesses. Some of our, one of our big exchanges, Huobi, is from China, and growing very well and doing very well here in Gibraltar. So we're really, really pleased to have them here with us. Thank you.
Great, thank you. I thank you, Henri, for mentioning the Lion Rock project, and we'll get back to it. But before, I would like to stay in Hong Kong, and I would like to address the next question to Syren, because I know that Hong Kong regulation is actually your thing, and you have a new book coming up, and we'd like to get a sneak peek. And as far as I know, it's on how the application of financial regulation impacts development of the whole digital ecosystem. And I know that you mentioned sustainability of using financial regulation. Can you elaborate on that, please?
Sure, happy to, Olga. Okay, let's start. I won't start with the book. I'll start with what's happened in Hong Kong, which many people will by now be aware of, is that the regulators here started up a sandbox project, which goes back about 2 years, and come to December last year, 2020, the first license was issued to a crypto exchange. This was to OSL, which is a subsidiary of BC Technology Group, which is a listed company. And that's kind of significant because what it means is that you have a traditional securities regulator bringing the operations of a crypto exchange within the usual kinds of protections that we expect from the traditional market. So it's kind of a nice idea. It's a really nice idea, actually. But there's kind of a trick to it. And to me, that the trick is where the sustainability issue comes in. And the trick is this, is that securities regulators are obviously subject to a scope of authority which is defined by their governing statute, the thing which created them. And so what the SFC have done is they've basically said, look, if a crypto exchange, and I'm summarizing, okay, but if a crypto exchange can trade one security token, then we can issue a license because that triggers the ambit of our authority. And then when we license you, we can impose conditions that stretch through all of your company's business. And it's a voluntary scheme. It's not a scheme which is trying to capture crypto exchanges. Crypto exchanges in Hong Kong basically need to avoid trading securities to be caught under the ambit of the regulator's authority. But this is an invitation to say, hey, look, if you actually trade some securities tokens, then we can license you, and then you get regulatory validation. The unsustainability aspect of it is simply that this is clearly not what the securities regulator was set up to do. However, I think it is a smart move in a context where you have things happening on the ground already that are just not regulated at all, but for this mechanism. So it is a significant step forward. And in making that step forward, it means that all parties learn a lot. The regulator learns, but it's not just the regulator, it's also the industry player, in this case, BC Group, that is learning how they can actually change their operational procedures and compliance systems and so on to make them palatable to a securities regulator. And so that's a big step forward. One of the drawbacks to it, though, is that it's only available to professional investors. So coming back to Henri's point before, is that if you don't, if you're pushing people who wish to invest and you're pushing them aside saying you can't invest here, they're just going to find another way to invest. It's very easy, as we all know, to log on somewhere and to get involved in the cryptocurrency market. So that's a nice step forward. I think one of the other nice things that's been happening in the region is actually up in Japan, where they've been making changes to their two main bits of legislation, the Payment Services Act and the Financial Instruments and Exchange Act, which is basically putting players in the market up there on much firmer footing. One of the things they've done is to authorize two SROs, self-regulatory organizations, which operate, you can kind of think of it as a bit like FINRA. So the regulator regulates the SRO sets standards, and then crypto exchanges or other intermediaries become, or people doing ICOs, for example, or STOs, then look to the SRO for standards that they need to comply with. And that's come about as a result of a willingness of the Japan FSA to really partner with the industry on very much a voluntary basis. That's how it started up, I guess, 5 or so years ago, and it has led to these kind of changes. And the consequence is, if we come back to what we were discussing earlier in terms of what's been happening in the US, what we see then in Hong Kong and in Japan is actually forward movement, which allows players in the industry to move ahead with their business. After all, people are investing capital to build platforms and develop a business and so on. It's allowing them to move forward with a much greater degree of certainty than what they would find in the United States at this point in time. So there's some good things happening. Over to my book. The book is where I take quite a different point of view to a lot of the narrative that's in the marketplace at the moment. What I do is I query the fundamental premise that it's appropriate to apply financial regulation at all to crypto assets. There's a number of technical problems, which I will not bore you with in this particular call. But when you look into how the securities laws work, whether you go back to Howie or any of the developments of that or the laws we have in different parts of the world, it's just not as simple to put some of these crypto assets into these simple boxes that we've created in the 20th century. That is money, securities, commodities, something else. This is a taxonomy which has evolved in the 20th century, and we're now looking at a technology which is actually certainly capable of serving financial purposes, no doubt about that, but it's also capable of doing a whole lot of other things in terms of societal governance and institutional arrangements. And one of the things I'm concerned about is that by applying a financial narrative, we've actually pushed developers, one, into creating financial products because there's some certainty. And then, as Henri was just mentioning before with DeFi, that's been booming from over the last 3 years, $250 million, then a year later it's 1 billion, then a year later it's about 30 to 40 billion. And that's moving into a completely unregulated space. So while financial regulators have come into it to de-risk the market, it's happened a little bit, but actually I argue that it's created more speculation around crypto assets as a speculative investment. It's pushed into areas like decentralized finance, which is very, very difficult to regulate. I think no regulator really has a good handle on that at the moment. There's fundamental legal problems about accountability and responsibility, putting your hand on somebody's shoulder and saying, you're the one that is responsible, which is quite different from our traditional centralized context. So what I then discuss basically is, how do we think about regulating differently? How do we think about regulating to create what I call a polymorphic ecosystem? That is not an ecosystem which is not just comprised of financial products, but an ecosystem which is much more, let's say, colorful and varied in terms of the other things, the other kinds of institutional arrangements that we can do with this kind of technology. And so, and I come with some proposals at the end of the book as to what a different kind of regulatory approach might look like. In short, I might sum up by saying this, is that while we have been regulating for risk, maybe we should start thinking about regulating for ecosystem development. If this goes back to something which is a really fundamental argument that goes back to the debates they were having in 1929, 1930, when they were introducing the Securities Act in the United States, is that act is there not just to protect consumers, it's actually also there to protect the interests of honest business people. And so there's an element here where if you're just looking at the risk reduction, you're only actually catching half of the intent of what we're supposed to be doing with oversight regulation. So I think there's a lot of things that we can do with the technology that we need to really start thinking about.
Oh, I was on mute, sorry. That's an interesting point, it's where the laws of physics do not apply to a macro world. You just create a new laws, right, of this world. I think it should apply to a virtual asset space. Do our panelists have any follow-up questions to Syren and his theory?
I think it's fascinating, and I will search for your book whenever it's published, because a lot of the thought process that you've taken us through is what we went through when we were looking as to how we could regulate the space. And the thinking was, can we regulate the asset? We came to the conclusion that we couldn't. And so we regulate the people that touch the asset. And therefore, it's a little bit more traditional, I suppose, in that sense, that we want to make sure that the people that are handling other people's money, in whatever form it is, whether it's through digital or fiat, have the same responsibilities, so that they are fit and proper, that they have a good business plan, they've got a reasonable chance of success. And that aligns very much with what you were saying, until you then took us to the very end, where you suggest that not just risk is important, and I agree. I just don't know what the answer to the question that you posed really is. So I will get your book and have a good read and see if there's anything that we can learn from that. But absolutely fascinating. Thank you for that.
I'll be happy to send you a copy. It's interesting what you say about regulating people, because if you go back to the to Nasdaq, this is one of the things that I was looking at in the book, is the evolution of Nasdaq is really interesting, because at one point it wasn't, quotes, an exchange, it was an electronic communications network that was causing problems for the regulators because it was decentralized in nature. And the solution that was basically reached was the National Association of Securities Dealers provided a forum where you could actually say, well, I'm going to regulate the person. I'm going to regulate the members, exactly as you say, Albert.
That's an interesting point. Henri, you have anything to add?
Yeah, I think it's going to be very interesting to see what happens with on the regulatory side. Frankly, I think in the immediate, I think in short term, right? I think we need to solve some of these practical regulatory challenges while globally for the industry to grow. Like we mentioned, some of the changes of professional investor rules, making sure that actually the financial institutions are on board with it. At the same time, ensuring that we have the right controls in place. I mean, very good example. I think what could really put the crypto industry back a couple of years is if we find out tomorrow morning there's a massive AML scandal involving any of these crypto platforms. The same way we saw, by the way, But when Mt. Gox collapsed in 2014, we saw the industry take about 1 or 2 years go back. And I think that's one of the things we have to keep in mind. Again, ensuring that we have, while we try to come up with probably what could be ideal, and again, what Syren may be discussing, is we need to fix some of these immediate problems that we have. I mean, good example, before we're talking about professional investor rules, let's look at a market that we all know very well, Hong Kong. Today, a grandmother that has zero financial education, but that has 8 million Hong Kong, which is about $1 million US in a bank account, is considered a professional investor and can buy as much Bitcoin and the crypto activity as she wants. However, a person that is very knowledgeable on crypto, knows crypto inside out, knows all the trading rules, knows how the crypto operates, and has years of experience, but doesn't have that 8 million Hong Kong dollars in cash, is actually not considered a professional investor. The fact that we're just looking at assets, by the way, that does not even include crypto, looks at only assets, money that you have in a bank, I think is a very, very bad way of measuring the adequacy of somebody, suitability to trade crypto. So I think this is a very good example of a problem that should be fixed, and not only in Asia, but many markets around the world.
I just responding to that, I know that one of the topics that we'd touched upon in the pre-panel session was about synchronizing regulations globally. And while I think we all generally agree with that, I don't think that's going to happen. And I think it's not going to happen for the same reasons that it has never happened before. We've spoken about, for example, passport rules for prospectuses for 3 decades, something like that, for a very long time. We've never got around to it. Why is that? We've spoken about passport rules for investment funds. A bit more progress there as compared to prospectuses, that is for equity listings. But I think when you look at different jurisdictions, the fact is that there are different legal systems, there are different regulatory preoccupations, where they might balance consumer interests ahead of developing a market, for example, different enforcement attitudes. Compare the United States compared to Asia, for example. And I think that all of those different elements come together mean that it's going to be very difficult that we can have crypto assets being treated in Gibraltar, in Japan, Hong Kong, United States, and in Europe pretty much the same way. I think what we can hope to get, though, is to set some sort of baseline in terms of minimum standards, pretty much along the idea that that IOSCO has always been behind in terms of securities regulations everywhere, having some minimum standards that everybody adheres to in some way, shape, or form. But there's still going to be different kinds of markets with different kinds of opportunities. We spoke about Ripple before. So Ripple's suspended from trading on exchanges operating in the US, not in Asia. Ripple's still getting traded over here quite actively. So there's still a good market. We spoke about ETFs before. So ETFs are an exciting idea, but if you look at the United States, the Winklevoss twins have been trying to push an ETF through the SEC. I think they've gone, I've lost count, I think it's maybe 3 times they've gone around that merry-go-round. And each time the answer is no, because of market abuse, market manipulation concerns. Another part of the market might be quite happy to launch an ETF. And I think, that's just the way our world is. We're not yet a single global society. And after the last 4 years, we are less so. And hopefully we'll be moving in a healthier direction going forward.
Time is out, and I think we could go on forever. We haven't even touched a lot of topics on regulatory issues. Thank you, everyone. Thank you for joining us at Greater Bay Area Blockchain Week. I think we should hope for, travel rule to apply to us all, and we get to travel in 2021 or at least in 2022 and meet each other in person, not virtually, and think better on how to synchronize countries and how to synchronize financial systems and how to make this world better. Thank you so much for joining us. Thank you, Albert. Thank you, Syren. Thank you, Henri. Enjoy the rest of the conference. It's Greater Bay Area Blockchain Week. Everyone stay healthy and have a good day. Thanks a lot.
Thank you very much.
Thanks. Bye.
Thank you.